Hello and welcome to Blythe Ray Business News. Today I'm joined by Ryan McDermott, who's Chief Executive of Phoenix Copper. Phoenix is listed in London on the AIM market with a ticker of PXC, but also on the OTC markets in North America with tickers of PXCLF and PXCLY. The company has a market capitalization of around £27 million sterling. Phoenix operates the Empire mine in Idaho, over there in the western part of the USA. Ryan, welcome back on the program. You've got this polymetallic Empire mine. I think you've been involved in it since 2017. Tell us how it's changed since Phoenix became involved.
Yeah, you bet, Tim. So when we acquired the project in 2017, it had been drilled off, and all indications were it was a copper-only deposit or a copper-only resource. We drilled it numerous drilling campaigns between 2017 and 2020, and it became apparent with the closer space drilling that there was enough gold and silver ounces associated with the copper that it was truly a polymetallic deposit. And then it became our job to figure out how to recover all three of those metals in the same process and take advantage of the gold and silver ounces that existed. And that's exactly what our metallurgists have been doing since we made that realization.
So what metallurgical processes are you now thinking about, and in what ways do you expect them to improve the Empire pit?
Yeah, so the metallurgy, good metallurgy leads to good metal recovery, which is obviously critical. And the recovery processes that are used have to be economic. So it's our metallurgist's job to not only maximize recovery, but to do so with the least amount of capital expense required at the lowest operating cost. Polymetallic deposits are not simple to recover. Trying to recover all three metals, turn them into saleable products is a challenge, but the metallurgical team we have working for us has proven in the laboratory that a combination of oxide flotation and then ammonium thiosulfate or sulfuric acid tailings treatment seems to be the best option, at least on an interim basis. So what they're charged with doing now is completing test work for commercial viability, and that is coming up with the best recovery method for the lowest capital and the lowest operating cost. That's really where the rubber meets the road, is in the cost it takes to recover these metals.
So using flotation for the open pit copper oxide deposit sounds like it could be very rewarding, but as I understand it, in using that method, you might be setting yourselves up for success on another project. Now, what can you tell us about that?
Well, and that possibility does exist. So as I think everyone's aware, below the open pit oxide deposit, we believe exists a fairly significant sulfide vein system. It's industry standard to process sulfide material in a flotation mill or a flotation plant. So if the economics work out such that flotation works for the oxide, we would then be obviously covering the capital cost for an oxide process that could then be, for a flotation process that could then be carried over, at least in part, to processing sulfides once we get to the bottom of the open pit.
Okay, so what comes next?
We're waiting on the final metallurgical test work that will bring us to commercial viability. And that is the metallurgist can show us that oxide flotation plus tails leach, and we believe, and if you look at table 1 of our last news release, you'll notice that ammonium thiosulfate is providing the best costing structure. once we get this to commercial viability, then we can finalize the process design, apply economics, and move very quickly toward production.
So Ryan, thanks for outlining the new processes. What's the potential impact, if any, on Phoenix's ESG credentials?
Well, that's a good question, Tim. ESG is vitally important to us. We've been working on ESG now for the last year and a half. The processes that our metallurgists have defined, oxide flotation and tails leach, have the potential of reducing the overall footprint compared to a heap leach operation. As well, typically flotation and tails leach would be confined in an agitated tank rather than out on a heap leach. And it's possible, again, just possible, that the footprint will be reduced enough that we can maintain most of the operations on our current private land. All of those things that I just mentioned are certainly have environmental advantages, and that ties in very closely to our ESG efforts.
Well, Ryan, come back, keep us updated, let us know what's happening with progress on the Empire Mine. Thanks for joining us today. That was Ryan McDermott, Chief Executive of Phoenix Copper, giving us a very, very exciting update on what's happening out there in Idaho. That's it for this edition of Blythe Ray Business News. Thanks for watching.